So I guess it's the great debate. Hessam, we're going to get, realtors who come on and say higher rates are fine. It just sort of readjusts the market. But let's be clear. Higher rates are probably ultimately not good for the housing market, are they?
You're completely right. Good morning. Great to be with you on the program. Interest rates are taking a bite out of for-sale housing demand. Appreciation in values has taken a bite out of demand for for-sale housing. And remember, in this expansion, really since 2011, the consumer preference shifted toward renting, and the higher interest rates and the home price appreciation have really put that demand for rentals on steroids. We're seeing apartment vacancies at a multi-year low, 17-year low, and there's very limited supply for the industry. There's been a lot of construction of high-end apartments in about 10 or 12 markets around the country, but as a whole, for the nation, rental housing supply has been limited. So there's been a lot of rent growth, and the investors in apartment complexes have done very well and continue to do well because of this shift toward renting versus buying.
Yeah, so is that the opportunity now? I mean, is the rental market maybe just buying a condo or buying a bunch of condos or an apartment building if you've got the capital? Is that going to be a good moneymaker going forward, Hessam?
I think it is. We have clients all over the country that have done very well investing in apartments and continue to put capital into apartments. Interest rates are challenging the values a little bit. Obviously, anytime interest rates go up and there is an asset class that requires debt, which apartments do or commercial real estate as a whole does, there is pressure on values and a bid-ask spread between buyers and sellers. But the fundamental outlook, assuming that the economy stays on a pretty moderate growth track, assuming that the supply constraint, especially now that we have some tariff pressures, we have labor cost pressures, continues to be more and more constrained, the math basically points to more demand for apartments.
Yeah, and the apartments are going to be, when I saw Detroit, listen, we're big fans of Detroit. I saw it, I thought, really, Detroit? Why is Detroit an opportunity?
Well, if you look at the lowest vacancy markets, you have markets like Detroit, you have markets like Orlando, and they all have different stories. New York is in the top 5. San Diego is in the top 5. The story of each local market is different. In Detroit, the story is one of a resurgence in jobs, one of a repositioning of that economy, and absolutely no new supply of apartment complexes in the last 10 or 15 years. Put those two things together and you get very low vacancies. Orlando is a different story in that you're seeing jobs come back at a record pace in a recovery market like Florida, particularly Tampa, Orlando. Fort Lauderdale, Miami, not as much, but they look pretty good too. And that's where the story comes in.